Hey everybody, how you doing? Happy New Year. So this is the first water cooler discussion we're doing here of the new year. So I'm pretty excited. It's been a good holiday. I know that for my team, we've spent a lot of the holiday kind of resituating ourselves and repositioning ourselves for the new year. A lot of shuffling has been going on, so it's pretty exciting. I hope that everybody had a good, very nice holiday, and the COVID situation didn't impact anyone too negatively. I want to kind of just dive right in to a couple of things here. I think probably the most important one is kind of more of this like marketing style of questions that I've seen out there. We've been kind of tossing this back and forth, been addressing some of this as we go throughout 2021. But I kind of feel now that we're into 2022, as I mentioned before we started these, we are going to be taking a much more direct approach to how we kind of handle these things. And I feel like that's probably the best way forward. Being a little more clear with what our focus is, where we're going, is going to give the community, those of you listening in, a little more insight into how we operate and therefore what to expect in the year. So kind of this question, when marketing, I think that the real answer that I want to give on this is, when I hear that question, I think it's more directed at when cryptocurrency marketing. So I think that the when marketing comment is, this is my opinion, is largely based towards when Unifi token marketing, which is fine. I think that's totally acceptable. There is also the question, like, when marketing around your individual products, that would be uTrade or 2LP providers and things like that. So first of all, on the token side, we're not like a shilling company. We're not here to kind of like, sell our token specifically. The token has a very specific utility within the ecosystem, and that utility is going to continue to expand as we as a company expand. So the real focus, the real way that I want to address that is, I don't see us so much as a cryptocurrency company as I do a technology company that is operating in the blockchain space. And that's going to come out very evidently, especially in the first quarter of this year. We've been talking a lot about some of the partners and things that we're doing there. I think you're going to see a lot more of our company in the public space. You're going to see us attending a lot more conferences and events and things like that. You're going to see us partnering with businesses in ways that may not seem totally in line with how we've been operating so far. You're going to see us working on products specifically for enterprise or business solutions. That's something that we've been working on since last year, and that's going to be coming out here in the near future. And I think that you're going to be seeing us basically talk about our company more like a technology company focused in the blockchain space rather than a cryptocurrency company. And I suppose the kind of fundamental difference there is, when you take a look out there at the landscape, there are tons of tokens and projects and things like that. You have tokens that are based, or I should say, you have projects that are based around token economies. These are things like, Cake is a great example. Pancake has a token, has a product that is reliant on their token. That is how they attract their user base in. That's how they grow as a company. It's how they're successful. Their partnerships, etc., are based around that token economy first. Then you have blockchains. These are, Harmony, Tron, Ontology, Ethereum, what have you. And these are all based around more transactions. So when they talk about their token economy, it's going to be based around that specific use case. We're a DAO first and foremost. So our token purpose is out there as a form of governance to be used. It's how we operate. the ecosystem that we have. And the ecosystem that we have today, is sizable. We're on 10 different blockchains. We have launched several products so far. This year, the product focus is probably going to be more B2B first. That does not mean it will not be a part of the same token economy. And then retail will kind of trail behind that as we progress through the year. So we're going to be seeing some big shifts there. And I think that that's really going to impact the way we talk about the company, the way we refer to us as a technology company, how we expand our team, etc. So that's all going to be evident. I think especially quarter one of this year, as you start to see the way our messaging comes out, the way we present ourselves, and new team members that come in. So that's kind of the big focus coming in. So capitalizing on entry into that business market means, I think I saw a question about this out there from the community, like what are our goals? So there are metrics. There are very clear metrics that a technology company would expect to follow, and that would be things like revenue, profitability, success, market cap, things like that. Like within the more traditional space, we're going to be looking at those KPIs. We're not focused on some of these more sideline things. We are looking to be a growing and expanding business in our ecosystem. So before I get into some of these other things that I want to talk about, there are some questions out here. So from Leroy, he has two questions. How's it going with Guardians? We had a referendum about it, but never heard anything about it after that. So yeah, the Guardian concept is pretty neat. So what this is this is our first step into DAO operation. So that basically does start with some internal DAO functionality. The Guardians that we're seeing there, those are the first DAO operators. They are still private, so we're trying to expand those out. And I think that that's where you guys are going to see that more so. So we have our smart contracts that we deploy. They're operated by a DAO, and we want to continue to expand the rights of that DAO. So the way I see that going forward is we deploy these contracts. The DAO controls that. It starts out with a few private Guardians that basically initiate these DAO transactions to update contracts and things like that. And then from there, we'll start to make those more public and more open. We're going to start to open up some of those slots to public people or public operators. Then from there, we can start to expand them into more voting-based, more rights, more functionality, more variables, integration of new smart contracts, etc. So that's all to become. It is something that we did accomplish last year, and we do intend to continue expanding on this year. So the second question that we were asked is, can you explain the other 5 million tokens will be distributed in which time frame? Yes. So if you guys take a look back at the original Binance token distribution plan, you can see exactly what the schedule was to distribute those. We have actually underperformed on that. That is because we did expect more tokens to be distributed on certain channels than we did expand on, or we did send them out on. And so if you take a look, there's a pretty sharp increase through, I think it's about November 19th of 2021. That was probably the last major change. And if you take a look at the curve there, it's fairly steep until that point, and then it basically levels off. We're well behind schedule. We've distributed far fewer than we had anticipated that we would. And going forward, it's expected that we continue to distribute less and less over time. I think that's going to be most evident in February. If you also take a look back at some of the distribution schedules, the time locks involved, you can actually see there are quarterly unlocks that did happen. This was a part of our partnership with Binance and etc. Those unlocks did occur. The last significant one happened in November of last year, so we're well past that, and there are no significant unlocks going forward. There's no other way to put it. That so I think it's going to be quite a long time that those remaining tokens are distributed over. And from my perspective, that the bulk of that is going to be determined by the DAO, and I would say the bulk of that DAO performance time is going to be done by the public. So I do anticipate it's going to take a very long time to distribute the remaining 5 million tokens. There will likely also be mechanisms in which some tokens go back into the time lock as well, which could expand that out further. So where we've seen a fairly steep first year, afterwards it's going to tail off quite a bit. So those are some good questions out there. I see a few more coming in. I'll see if there's anything here that I want to address directly. And then I'll get to the last two things that I want to talk about here. That's a good one. Okay. Yeah, so I'll go ahead and address the one by Joshua Jackson. Because the second one is I think more internal chat. When can we expect to see more on this in-house bridging solution you've been working on? I know that everybody is super excited about that piece. Yeah, so the in-house bridging solution has been through the ringer as a company. We have brought in a lot of new people. As new people come in, new ideas come in, new solutions come in. As the market evolves, new solutions come out. I just now read through a pretty cool overview by Galaxy Digital, actually talking about 2022 being a pretty significant year for bridging solutions. So I do anticipate that's going to take off. But ICE is out there, Snow, their whole ecosystem is out there for a bridging solution to come out soon. I know Polkadot is doing a lot of stuff. Harmony is actually very active there. A lot of people are going into this space. From my perspective, the bridging solution that we're going to offer is going to be a lot more catered to our ecosystem as that expands. When can we expect to see more? That's really tough. Q1 of this year is very focused on one particular B2B solution. This bridging solution is still in the queue for this quarter, but I can't give a specific announcement on that. I would stay tuned and continue to ask that in here, and I'll try and get more information in a future discussion. So with that being said, I'm going to dive into some of the other things that I wanted to talk about here. The first one is kind of my thoughts on DeFi. I've been working on an article here, and it talks about DeFi and kind of the state of that. And I've talked about some of this in the past, specifically about how the DeFi space has grown significantly. It's about 10x since last year, maybe a bit more, maybe 11. And when I compare that to the industry itself, well, the industry is 10 or 11x in like the last year. So from my perspective, I don't really see that the DeFi space has grown as much as a share of the total blockchain market space. And from my perspective, the reason that is because we saw DeFi kind of boom last year, very very early in the year. We saw that take over and be a huge push. A lot of tokens did very very well. A lot of blockchains grew because of it. But what happened is as they started to tail off, they were replaced by what I think is a very likely more institutional participants. So I would say there are whereas last year I'd say retail was a huge piece of DeFi. It was a major involvement. There were a lot of individual farming, things like that happening. By the time that we got to the middle of last year, there were basically three, I'd say, equal sized participants there. And those would be your arbitrageurs, basically your very savvy individuals that are trying to rebalance pools using things like Aave and flash loans to basically do some very cool arbitrage and make pretty decent income off of. There was also your retail still. They were coming in constantly. They saw the news. There are some downsides there. And then the third piece of that, I'd say, is institutional, which has kind of really taken off. Last year, more and more money was trying to come into our space. I think a lot of institutional funds were looking at our space and saying, how can I get more involved? They saw the opportunity in DeFi, and they really didn't have a way to get involved that wasn't through some, public open source. So that's great. That's the way that they should be involved. But putting a little touch on the ball doesn't hurt. And so I think that that's going to continue to expand. So now we get into the start of this year. And when I look at the DeFi space, I feel that retail has tailed off a lot. I think there are still your arbitrageurs, your bot operators, and things like that. I think they're still doing extremely well. We see price movement constantly, flash loans and whatnot. But I think that a lack of education in the space around impermanent loss and some of the ways that a lot of these AMMs do operate left people vulnerable. And I think what happened is people came in, they saw these insane APRs, and they said, "Oh, great! I'm going to buy some obscure token, some altcoin. I'm going to pair it with BNB or ETH. I'm going to throw that into a pool, and I'm going to do great because I believe in both of those tokens." What they didn't realize is that when you do that, you're taking two tokens that are going to change in price, not always in consortium. And so what will happen is, as the price on those two tokens does start to vary, to the positive or negative, we start to see impermanent loss. And I don't think there was enough education in the space on what impermanent loss is and what to expect from that. So we saw token prices start to vary, start to deviate a lot. People saw that the value of their LPs was maybe not what it could have been if they didn't participate, and the rewards that they received, whereas they may have been worth a lot, as the market kind of pushed down some of the altcoin rewards tokens, the rewards shrank and people got burned. I think that's what happened. Obviously this isn't like some well done research paper on this, but I think that's what's happened, and that has kind of pushed retail a little bit more on their heels here, and it's made them less active in the space than we have institutional and more savvy bot operators. So with that being said, arbitrage is still a fantastic opportunity. When institutions come in, they come in with a lot of funds. They're going to want very high security solutions. They're going to want very reliable solutions. They're going to want to discuss things like impermanent loss in depth, what the rewards tokens are, and the viability of that being sustainable in depth. They're going to want to look at the smart contracts and what their ability is to interact with those. If there's going to be a roll-up solution, how that's going to impact their timing of entering and exiting the market. Tons of discussions there. Then on the arbitrage side, that's just going to become more important. If you now have banks or hedge funds or investment funds or what have you, private investment, like things like that, those come in and they operate their kind of own maybe bespoke solution. There's a gap there, and there's definitely a need for somebody to rebalance those pools there, and I think that that's a huge opportunity. So I think that individual operators and institutions are going to continue to grow and be successful. So my 2 cents on where that's going to go. And so I think that kind of takes us through, the major things that I wanted to talk about here. The last thing, I've been reading a book, or I did read a book over break by Ben Horowitz. It's called The Hard Thing About Hard Things. Great book. It's all about starting a technology company. A publicly traded technology company, not something many people can relate to, including myself. But it's super interesting. The perspective is very interesting, especially when you look at he was starting a company when the internet was kind of taking off. Obviously, Andreessen Horowitz is extremely active in the crypto space today, so they tend to be ahead of the market on venture capital and things like that. But I think it's a very interesting book, and my number one takeaway has been culture. And I think that the thing that I took away from that was that the values and the culture of a company are extremely important in how that company performs, because that's going to determine what kind of talent you can bring in. It's going to determine how your community or retail or businesses perceive you. And so our culture has always been based on two rules. You have to want to be here. You show that you all want to be here by being super active, involved, coming up with new ideas, raising your hand, putting information out there. And you have to be somebody that we can trust. And I think that after I read this book, I think it makes me want to change that slightly to basically mutual respect and trust. So it's kind of the same thing, but at the end of the day, respect goes both ways. I think it comes out in how we interact publicly with people, how we address questions, being more professional, making sure that we're very direct in how we respond to things. We're not trying to, hide things. We're trying to be a very open and transparent company, and that's the most respectful thing that you can do for our partners, our individual teammates, and publicly as well. And then, trust has been a key part of our business since day one, since 2018. That will continue to be absolutely critical in how we're successful. So with that being said, hiring, I saw a question out there in the community about that. Hiring has been going great. I think we have new, more public-facing team members starting next Monday or Wednesday. It's next week. So that's going to be great. I'm looking forward to that. We are looking for a ton of support still. We have interviewed a lot of people. We are continuing to look in the marketing side, but I can tell you graphic design continues to be a very important piece of our business, continues to be something that we're looking for, particularly in the California, Los Angeles region. That's where I'm based now, and actually Madrid, Spain. So if you guys know people in those two locations, that's where we as a company are primarily based, is those two hubs. Obviously, we're distributed everywhere, but those are the two primaries, as well as development. That continues to be a big piece of the business that we do want to expand and invest in. So if anybody knows someone, reach out. We're not your traditional team. We tend to be very open and transparent internally. So I am really looking forward to seeing more people apply and onboarding more team members this year. That's a critical part of our business. Hiring the right people, bringing in a good solid team is going to make us a more successful company as well. So that's all that I have here, guys. I'm going to cut it out. The framed poster behind me, this one. So I made the frame. I'm pretty proud of that. I do woodworking on the side. I've done tons of furniture around my house. This is actually by Jill Greenberg. It's a poster. I think she's pretty famous photographer. She does all kinds of high impact, high flash, direct photos. So my wife got me that for Christmas, and I framed it myself over break. So yeah, that's it. I'll leave it at that, guys. thank you all so much and have a great week. Bye.